to the TMT stock market strategy video for Friday, February 19th. Well, we did get a pause day after 4 days up, actually 4 days of gap ups on the opening. And we just kind of solidified that move and held into our gains from the last 4 days, which is good. But what's interesting is that the risk off type plays, such as the utilities, the REITs, healthcare, consumer staples, gold, got a nice bid yesterday telling me that there is still fear in the marketplace. Yes, the VIX did sell off, and I did mention about we're talking 37.40 would probably solidify some sort of a bottom in gold, in equities if the VIX were to get up there. There's not enough fear in the marketplace, even though we had our sell-off since January for the last 5 weeks, but we still see market participants coming in looking to buy the market. Now, we are coming into some good strength, back-to-back strength, and I mentioned that on a seasonal trade such as March and April. We also come into peak inventory builds in gasoline and in crude, where we have the refineries that actually start doing their maintenance work, and that usually kind of tops that bill, which is a good sign, because if that's the case, we get some stability in crude oil, where we did get a really nice move in crude from last Thursday's announcement that OPEC is looking or exploring cutting production. And then we had that meeting with Russia saying that they were going to freeze production. So not a bad move from the move up. Do I think that oil is has bottomed? Absolutely not. I don't feel that way. At least I don't have enough evidence in my technical view that we have oil that has bottomed. We did come into a big build yesterday's announcement, which tells me, no surprise, that we are going to continue to build up in inventories and kind of cap what oil is doing. That should kind of cap as well what U.S. equities are doing, because it's heavily weighted in the S&P 500, oil stocks, exploration stocks, production, refineries, what have you, highly weighted in oil plays. So where do we go from here? Well, I do see that's coming into, again, some seasonal strength for March and April, but that could trump any type of play if there is some sort of a nasty announcement, geopolitical event, what have you. So just keep that in mind. But I want to show you the XLU, which is the utilities ETF. You could see we had a beautiful move out of our symmetrical triangle, sold off nicely on low volume, which is a classic bull flag pattern, and then we broke out on heavier volume. So not a bad sign. But again, the fear factor is still out there, where market participants, investors, what have you, are parking money into this trade, where usually XLU comes into seasonal weakness. Okay, so that's not a good sign. GLD, same thing with GLD. If you can look at that, we had a big pop yesterday. Same thing in gold. I think that gold really has it bottomed. I still see easily. I think you're going to see 100 print in gold, and then if we can break below that, I think we'll flush and then rally, and that would probably be an interim low for gold. I'm not sure if gold is ready to run up. Yes, it has run up because we had that fear in January and in February. You could see here. So that play did occur, and it wasn't a bad play as well if you were participating in gold. But you could still see well bid up in this fear trade. So that's not a good sign. Let's go right into the indexes. You could see here on the spiders that we are now at that 187, 182.50. That's going to need to hold again if we were to come back down. Again, we just paused here underneath that 50-day moving average of 194.09. And we're breaking back out. And let's see if we can hold this downtrend line now with support and break higher. Okay? Same thing. But you see we had that lower lows and lower highs. Same thing here in the RSI. And we don't want to see this thing break up and then move higher again. That'll create that little bull flag in this pattern. But right now, to me, I think we're coming into these good value areas. Remember, guys, there's a lot of resistance up above here. You could see this, and a lot of longs that are still trapped back up into that 1990, 2000 area, okay, which would be 200 here in the spiders. A lot of guys trapped up here. So once you get closer to this area, into this 195-ish, 198, call it 1950, 1970 in the ES, S&P, you're going to get selling coming in. I think you're going to get pushed one more area down, maybe retest that 187. Make that higher low from here, though, and then I think you go back up again. All right. Now, again, we need to monitor the pullback, okay, and treat it as it is, okay. If it's going to be low volume, heavy volume, is the pullback that turns into a full-fledged sell-off, with a lot of fear coming in. That's what we need to determine, and we don't know that yet. Okay, take a look at the 60-minute chart I mentioned yesterday. Watch, guys. We got heavy resistance up in here. Heavy resistance. You could see this volume zones. Now, remember, it works the same as it does down. We have a thin zone going up. So if we do break up and we start to hold and we still shooting higher, this is going to fuel even more of a short covering rally because of the fact we have a thin zone here. Very light as far as any type of resistance. You could see gaps in all of these areas here. Okay, so this is something that we're going to be watching. We'll be watching on the 60-minute as well. Lots and lots of gaps here, okay? So that's going to need to get filled at one point. But you can see that we're grossly overbought here in the MACD and the RSI, okay? Take a look at the Diamonds Daily. Again, capped underneath the 50-day moving average, just kind of holding in there, holding gains, which is fine. You know, for the bulls, that's great. You know, it's just that we need to see if we're going to get some selling coming in. We're down now about five to seven handles in the ES and the Globex session, so really not that much to really talk about. Still holding in most of the gains in the overnight. All right, IWM, you can see that barely getting. We didn't even get close to the 50, so this tells me there is still some weakness out there. Our secondary leader can't even get to the 50. So again, 1, 2, 3, 4 days. We closed, had an inside day from the previous day. So this is just telling me that here either we're going to head back lower, make that higher low, or continue lower. All right, so that's something that we don't know yet. We need to watch. Today is Friday, so you're going to have that typical Friday's trade, slow grind one way or the other. So be careful. If you make a little bit of money on Friday, just call it a day, run out, play golf wherever you are, and enjoy the rest of the day because it's not worth it. All right, Qs. Last is the Qs, and you could see here resistance at the 102.70, holding nice and true. You could see that a couple times it held, failed, and this one failed as well. Now here again, lower lows and lower highs, and we'll just see if we can back test that downtrend line and move higher. And this would probably come back down into this area here. But again, you notice that the 50, not even close to the 50. Okay, so technology is still a little weak. And we're getting back into these safe trades, these safe haven trades, as far as the GLD, the gold, the healthcare, the REITs, consumer staples, and of course utilities. So I like to see them start to really sell off. I like to see the VIX really get down into below 20. That would be a great opportunity. Then we'll say, okay, well, you know what? We are getting some aggressive buying, and maybe the bottom is in. And or I'd like to see the VIX get a lot of fear in the markets, which would be better. Get a big flush in the markets, have a big spike in the VIX, and I think that would solidify an interim low in the markets and get set up for a nice spring trade, spring to summer rally. Okay. Hope it helps. Have a great weekend, all, and I'll talk to you on Monday.